This upcoming week for Bitcoin is going to be big. With NFP data coming well over expected, the DXY has seen a significant rally. This could potentially shift the narrative in the market towards a healthy correction. We're going to go ahead and discuss the short-term price action today, discuss the macro, and talk about the likelihood of a crash moving into next week. Let's go ahead and jump in. Okay guys, welcome back to the channel. I hope you're all having a fantastic day. We're going to be discussing Bitcoin today, talking about Bitcoin from a short-term perspective, a macro perspective, an economic perspective, and of course, discussing a DXY and the broader markets and market data. There is a lot to unpack today. We did actually get left with a bit of a bombshell before the markets closed, which of course was the NFP data coming at 190,000 jobs, more than forecasted. Which is mind-boggling, guys, how inaccurate they were predicting that 190,000 jobs more was absolutely astonishing. And of course, this resulted in the DXY seeing a massive rally. As you can see on the chart over here, we saw the DXY bounce from 100.7, around 2% in a very small amount of time, all the way up to 103. This in fact actually retested that support line we were discussing in our video and broke through our next resistance line, which we're discussing once more in the video. Again guys, we'll discuss what this means later in today's video, but essentially as the DXY does rise, we do generally see cryptocurrency drop, and this bullish formation, this bullish consolidation, a descending channel, could be an added piece of information that would strengthen the claim that Bitcoin is more likely to reject at this macro resistance at 22,600 to 24,300 toward the downside to find healthy support before we continue upwards than it is to break right through it. So we'll discuss that in today's video. Before we get into it, smash the like button, hit the comment button, subscribe to our channel, or join our Telegram channels. Link down below. The second link will get you access to our Telegram channel, updates, charts, analysis, information, videos, news events, educational posts. All of it is in here. Join up, and you can join our VIP channel. Trading signals, entries, targets, stop losses, exclusive analyses, exclusive altcoin analysis, and even a group chat with over 500 members discussing crypto on a daily basis. You can get access to that by contacting me via the 3 channel. All the information can be found, of course, in our pinned comments right over here. Let's get into the video, starting off with, of course, the daily data. So, how are we looking currently? Feb up a very small amount. Now, it is very unlikely to assume February is going to be very bullish. I do not think February is going to be bullish for Bitcoin this year. Now, here is the thing, guys. Historically, February is actually a really, really bullish month. Historically. As you can see historically, we do see more times than not, Bitcoin is actually green. So if that trend follows through, theoretically, we would actually see a green month this month for Bitcoin, or at least we are more likely. However, there are more things to play this time around than not. We have just seen January close 39.63. Out of the X amount of times Bitcoin has had a monthly close, which has been many, many times now, only 8% or more times we've seen a month close above 39%. So historically, we have seen one of not only the strongest months Bitcoin has ever had, but we have seen the strongest month Bitcoin has ever had in 14 months. It is very unlikely to see an incredibly strong month follow up from what we just saw in January, particularly when we are not even near in a bull market yet. Okay, so generally the higher we go, as the price goes higher and higher and higher, the risk of the pullback starts to increase. So you got this unequal tip in the balance. Okay, moving on from there, guys, we can see liquidations have come down. Volume has come down quite a considerable amount, 30 to 40% for each. Again, that is expected as we push into the weekend. Generally, there is usually a little bit less volume being traded. We can see volatility has continued upwards to 2.37. Of course, it is a 30-day period, so we'll start to account more significantly for this section as it starts to unaccount for this consolidation phase. So the average in volatility starts to increase as the time pushes along. Okay, so we are starting to see volatility rise. Just because we are seeing volatility on a 30-day period rise, it doesn't mean we have high volatility here. In fact, our volatility here is actually very low. Okay, now we'll come back and talk about that in a second. Liquidations, as we said, have been quite spread. If we look at the last day or so, we can see we've had some longs, some shorts liquidate. We have been a little more choppy, but for the most part, longs have been liquidated a lot more in the last couple hours, particularly the last 24 hours, than we have seen shorts. Let's go ahead and talk about the broader market. So the DXY did bounce, as we mentioned, because of the NFP data. And we'll discuss today how that influences Bitcoin, of course, NFP data. But essentially, guys, if we take a look at a broader spectrum, why this influences Bitcoin and how it influences Bitcoin to some degree, we have to look at how data influences the economy. And this is a formula sheet, a little diagram that I explained. One of the economic models I've used actually in the last 2 years to make massive profits, guys. We were talking about this way back before bear market even started. This is one of our main models we use to predict the bear market starting and capitalize on the bear market. And in fact, guys, if you want to learn more about this, head over to our Telegram channel actually, because I posted all of these in here. All three of our models. It was our beta model over here, so a return on investment model based on correlation between stocks and crypto, how inflation and perceived inflation, how the perception of inflation and pivots impact decisions in the market, and of course this flow chart here about how CPI and inflation impact consumer spending and obviously company spending. And we can see over here, we have a video over here explaining all that, so go watch that if you're more interested. But a quick overview, you have CPI over here, which influences inflation. Obviously it's a descriptive tool, measure of inflation. We have interest rates here that is determined based on inflation. So the interest rates essentially go ahead and increase or decrease based on inflation. Here's very, very brief overview. PPI and other leading economic data such as NFP can be used as a leading tool to expect what CPI is going to be. So generally, if we do see NFP see a massive jump up, we have an increased chance that we're going to see CPI actually start to increase a little bit. Now, this throws out the current narrative. The current narrative in the market is that we're going to continue down with interest rates. Interest rates are continuing in this downtrend, this black line's a downtrend, which will eventually reach a pivot, which is represented by the crossover of the 0% line over here. Okay, that is our pivot. At the moment, since we had NFP come in, the perception has shifted. This downtrend has been disrupted. We could potentially see a little hiccup, and this hiccup could again shift the systematic risk or the perceived systematic risk in the market, which will change the narrative in the market and therefore influence where these asset prices move in the short term and potentially long term. And that is why this data was so significant. Now, it is impossible to say for sure that this NFP data is going to actually influence CPI, but as long as it's got potential to do so, like I said already, the markets don't need to reach bottom interest rates to rally. They will do it before, because markets move on what is perceived, not what is actually there. So as long as there's a potential to do something, if that potential risk is increased or that risk is deemed worthy to be notable, therefore the markets will then move based on that potential. So as long as there is a potential that CPI could come in higher, the markets are going to try to price that in or try to find a level at which it is comfortable with that data coming out before that data comes out, and that is what we call priced in. So moving on, guys, we are looking at the Dow Jones. Not going to go over too much. Symmetrical triangle formation. Again, this is a bullish consolidation. Directional break will determine direction. Break to the downside, we are heading downwards. Break to the upside, we are heading upwards. The trigger for a move upwards is going to be 35,000, which will result in 36,000. Moving on, S&P 500 is at resistance here. We have broken through a major downtrending diagonal, which is of course our bear market resistance. S&P 500 is technically out of the bear market, guys. This is a reversal structure. Reversal structure has met its first target. This of course is our first rejection zone. Major trigger zone for a bull market or uptrend to develop is above this local high. So a uptrend will develop above this local high. This trigger is going to enable the price to reach that level. Until then, we are in the risk of actually coming down, as we have developed some sort of rising channel, or in the starting of a rising channel, because obviously we had 1, 2, 3, only 3 points of retest, so not enough to confirm it, but it is looking like we could potentially develop. So the risk of a move back towards this level is actually very possible. So definitely keep that in eyes, keep in your eyes, guys. If we are breaking over this trigger level over here, we could definitely see a move upwards, and nothing bullish until we break over. Moving on, guys, bond yields are very concerning. Bond yields do give us some leading information on what the dollar will do. If bond yields rise, generally the strength of the dollar is going to rise. We have seen the bond yields actually break out of a falling wedge structure. A falling wedge structure being a bullish reversal structure, an extension structure, continuation structure, you name it, whatever you want to call it. Okay, we are broken out of this structure. This of course could indicate that the 2-year government bonds are going to continue upwards, and that will of course result in Bitcoin coming down even further. So keep that in mind. All these pieces of information are very relative right now. You're probably thinking, well, why did we spend so much time talking about that stuff? Because it is so important. We create a story when we're doing technical analysis. We have to create a story. We have to create an underlying, I guess, basis of what we're building our analysis off. We have to create a narrative. We have to create a bias built on education and probabilities, and then fit our analysis into that and decide based on that and our analysis, what is the probable outcome. If you do not have a general idea of what is happening in the markets, what the market is looking like, you're going to be misleading yourself. Okay, it's very hard to determine from a probabilistic standpoint what things are actually more likely to occur, because there is more that happens in the price action than just TA. You have to apply TA with context to actually get results. So let's take a look at the large time frame, then we'll get into the short time frame. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Bitcoin, like I said already many times, we've been talking on this channel. For the last few weeks, guys, we've been saying Bitcoin is weakening. Bitcoin is weakening. Bitcoin's at resistance. The volume's decreasing. The volatility is decreasing. The rate of movement we're getting is decreasing. We're getting compression, decreasing volatility, decreasing momentum, and decrease in volatility. The 3 important decreases that signify a reversal are here, okay? So the 3 things we look at when we're looking for the increased chance of reversal, we have those 3 things. We're at resistance as well. So take those 3 drivers, apply it to the context of structural analysis, which is we're at resistance. It is more likely we are going to come down. It's as simple as that. Not guaranteed. Nothing is guaranteed. It is more likely we are coming down. So Bitcoin has completed the reversal structure. The reason we know that is because the reversal high took us to the high of the first retest of our falling wedge structure. Falling wedge retest 1, push upwards to local high, drag that across. That is going to be our target. The reversal was completed. The reversal out of the falling wedge has been completed, okay? Moving there, guys, for our uptrend to initiate, I've been saying it many times, we need to break above 24,300 and 25,000 being that trigger. A break over these levels will confirm that this reversal has extended and developed into a macro uptrend. Now, will a macro uptrend result in a bull market? That is entirely another question. For a macro uptrend to result in a bull market, as per the 4-year cycle, we need to be breaking over prior bull market lows, okay? Bull market lows being the support lows in the bull market. So these yearly lows that the bull market's faced. You can see over here, every time we break a monthly candle above it, we never go back below it. Break a monthly candle above it, we never go back below it. Where is that level this time? $30,000. Where is that level on this chart? This this red box. So breaking through this level here will facilitate an uptrend that will reach this level at some point. Now, it may not reach it initially. It may not just be straight up. We could push upwards, down. We could go up, but whatever. But breaking this level here will confirm that we are most likely to push to that level at some point in the near future. Breaking through this level here on the monthly chart and closing a monthly candle above it will confirm the bull market is getting ready to start, okay? Now, until that happens, guys, what we are seeing right now is, of course, a rejection from our major horizontal resistance. I don't want to say it over and over again. I've said it many times. And I know there's a lot of people in the comments say, oh, well, you're being too bearish. You're being this, you're being that. I'm not being bearish at all. I'm being entirely objective in my analysis. I'm leaving emotion at the door. In fact, I have Bitcoin. So if I was being objective and if I was being emotional, I would be saying, let's go to the moon. Because I have a lot of Bitcoin. I have a heap of Bitcoin. I have a heap of Bitcoin and I have some altcoins. So to sit here and be like, No, Bitcoin is at resistance. We're more likely to reject. While I have Bitcoin is the exact definition of being unemotional and objective in your analysis. I'm saying things and I'm telling you guys things that directly goes against my benefit with my investment. Okay, and now you'll say why? Well, I bought Bitcoin very low, right? I bought Bitcoin around 17,600. Also bought Bitcoin around 16,500 and 19,200. So I'm at a massive profit. But the fact of the matter is, guys, if we look at Bitcoin weekly chart, we're at resistance. We haven't even created a new high over here. We do have a potential to come down. NFP data, DXY rising, bond yields rising, short-term weakening. The stars are aligning for a drop. Will the drop occur? No one can say for sure. It is impossible to say for sure. All we can do is align ourselves on the probability. And on a probable basis, on a statistical basis, if I had to give you a percentage chance, going off everything I've gone off, I would say there is about an 80% chance we see that pullback. There are a few scenarios in which we will not see the pullback, but there is about an 80% chance we will. Now, where will the pullback take us? If we look at the short term, guys, we'll come back to the technicals in a second. The short term, we're looking at structural levels. Remember, what determines reversals? What determines continuations? It's not your technical indicators, your structural levels. Your structural levels, your support zones, your horizontal retests, your diagonals, those are the points where reversals and supports are found, not on technicals. Technicals simply tell you the strength of a trend. Where are we looking? We're looking at these red lines, okay? We're looking at 22,500. We're looking at 21,500, previous high over here. We're looking at 20,800. We're looking at 20,100, 19,500, and worst case scenario, even here. Unlikely. As we start pushing downwards, each consecutive low becomes even less likely to be reached. You have to remember, it is like a scale. As the price moves downwards, every single low becomes less likely to be reached, as the downtrend needs to be considerably more strong to push downwards. As the price goes down, more buyers and more buyers are pushing in, weakening that downtrend. So as the price moves down in a downtrend, it becomes increasingly likely a reversal is going to occur. Just as if a price moves up in an uptrend, as you go higher and higher, it becomes increasingly more likely a reversal in the opposite direction is going to occur. You have to understand how the balance works. It's not random. Reversals don't just randomly pop up. Not how the price action works, okay? So, looking at a technical standpoint, I'm going to say it again, guys. We are not actually yet in a downtrend. This is why I'm giving you guys an 80% chance of a correction, because there are certain pieces of data here from a technical standpoint that actually signify we're still in an uptrend. And we are still in an uptrend. If we look at the data over here, we're looking at the technicals, we are technically in an uptrend, but the uptrend is massively weakening. We are in a weakening uptrend. Look at the technicals. I'll show you two technicals right here. Not that one. Not that one. The Gaussian channel and the market cipher rate. Starting on the easy one, the Gaussian channel, okay? A little easier to understand. The Gaussian channel suggests we are in an uptrend until the price action breaks below the midline and the bottom line of the Gaussian channel. The midline being the first indication of massive weakness, okay? Now, weakness not just signifying the trend's about to crack, but weakness in a major sense is signifying we're very, very likely here to be reversing this trend. So it is a reversal signal, okay? Breaking the midline is saying, hey guys, this trend is about to reverse. Breaking the bottom line is now confirmation of the reversal, okay? Breaking the top line is what I said before, it's weakness. It's saying, all right guys, the trend is starting to weaken. Keep your eyes on this uptrend. It is starting to lose momentum, volatility, and volume. Remember how I said at the start, there are three indications of a trend reversing: volume, momentum, volatility. Before even looking at a technical standpoint, the price action can tell you what the technicals reflect, because technicals are a derivative of price action. So if you understand structural analysis and you understand what certain structures mean in terms of what they reflect based on volatility, volume, and volatility, volume, and I forgot the last one. I've lost my mind. I've talked too much. You can actually understand momentum. Sorry, there you go. I was thinking about 3 V's for a second. Volatility, volume, momentum. You can understand how these technicals will be reflected on the chart. So these two things, whether it be a structural chart or it be a technical chart, they both actually tell us exactly the same thing. They're representing those 3 bearish indications. Now, understanding that, we can predict, well, 2 things. Number 1, At what point do we have structural confirmation, and what point do we have technical confirmation, and what significance should we apply to those two? So looking at this, guys, like I said, structural confirmation, we're looking for a breakdown of this trend. It is no surprise that this trend actually aligns with the midline that Gaussian channel. It's quite a coincidence, or is it a coincidence? It's not really. The price will break down from that point. It will tell us, guys, this uptrend is losing strength. The reversal is imminent, and this will be the confirmation. The confirmation being the breakdown of our major resistance zone over here, flipping the trend. Okay, so technically we are still in a uptrend until that occurs. Market cipher A is signaling something very similar. 4-hour chart, we're seeing that weakness occur. Again, this is when the price pushed into the Gaussian channel. We're seeing the weakness. The price is still hanging on by a thread, guys, above two significant levels. The market cipher A, 50 EMA, as well as this red line sitting at 23320. If you remember back to a few weeks ago, this was our upper resistance level of this very small horizontal channel we developed over here. Okay, you can see 1, you can see 2, you can see 3, and then a break. Okay, so we're actually currently retesting the upper level of the horizontal resistance. So eliminate this area over here, and you can see a very clear horizontal line. So the question is, are we going to be bouncing here? Okay, or we're going to continue down? And here's the statement. This is a big thing important today, guys. If we are going to bounce, this is where we're going to do it. If we are going to bounce for Bitcoin, we are going to bounce here. I do not see Bitcoin dropping lower and then confirming a bounce. This trend's last leg, in my opinion, to see a continuation upwards is going to happen here. We need to see a bounce here, otherwise Bitcoin is going to break too low on the short-term structures, the rising channel, as well as break too deep into our technicals, like I said, the Gaussian channel, and will confirm the trend has weakened too much and will most likely, or the probability has even increased even further, that we continue down, because then we'll have technical confirmation and structural confirmation, along with economic information, macro information, and all that information we talked at the start to confirm this reversal. Okay, keep an eye on this, guys. Definitely something very important to look at. I'm going to end the video there, guys. If you've got any questions, leave them down below. You can join the Crypto Academy, guys, if you want to learn how to do TA. Not just TA, structural analysis, market analysis, guys, risk management, trading, market psychology, all of that stuff we teach you in a very comprehensive 10-unit course, guys. In our courses, we have slideshows. We have videos to go off every topic. There's like 70 different videos. We have worksheets and questions and problems for you guys to work on. We have diary journals. And of course, we even have certain Excel sheets to keep you guys accountable and help you guys track your trading going forward. So go ahead and contact us. We have over 90 students now in there, which is absolutely phenomenal. Has some great results and great referrals from there. So go ahead and contact us for more information. You can contact us via the email over here. Okay, let's end the video and I'll see you guys tomorrow. Cheers.